So we are going live in at 6 o'clock, and if you guys are there, please do share the link with your friends, and if they are interested, let them join. Hi Vijay, very good evening. This video is very much needed for my mindset change. Yeah, I'm sure it will be useful for everyone, including myself. As I talk more about this, it is also a way to build this. So, uh, although I try my best to practice it most of the times, sometimes I do slip myself, but then these are extremely important skills that we are going to learn today. I'm sure everybody, irrespective of their experience in the market, will be immensely benefited. So, if you really wanted to support, please do share this in social media platforms and share it with your friends who might be interested in joining our session. Uh, I'm going to just invite more people. by posting it on social media. Let's see if we have more people joining and it's fun. Right. So Vijay, you there? So if you guys can hear me, just say hi. We are going to start at 6 p.m. Hey guys, do let me know if you're able to hear me. Hi Rajat, good evening. So we are going to begin at 6 p.m. We're expecting more people to join. Just let me know if you are able to hear me. So swing trade में लॉस हो रहा है, कोई strategy बताइए. Definitely Rajat, you can manage even your swing positions, but then you need to have good capital for doing adjustments and writings. So are you basically a writer or a option buyer? This video is definitely for people even despite carrying it to overnight and swing trading that you are trying and still that you lose money, then you need a better strategy and most likely a very good discipline. So this next 2 hours we are going to explore many risk management strategies, how to optimize your wins, how to reduce. 4 lakhs capital is good. It's good. You can really manage. Hi Kempagoda, good evening. Welcome. Yeah, just guys, one of the suggestion is that if you can share it with your friends group, anywhere on the social media platform that such a program is about to start, then we will have new people joining in and it will be a lot more exciting to have different perspective. People with like 4 lakh capital have joined, people will have only 1 lakh, people may have only 50,000, and there are also people with even 20 lakhs capital, right? We will have very diverse range of players joining in, and we will explore all sort of risk management techniques from low risk to high risk, and how do you manage it. Everything we can do that. Sir, I'm back to a capital of 15k. What happened, Abhishek? I'm very sorry to hear that. You were having a very good capital, I believe. What happened? Oh, that's okay. It's not like you lost it, right? It's just that you took the money out of the trade and you have used it for other reasons. So, nothing to worry. This is great. So, let's give an update. So for last 4 months that you have been there and it's loss of about 20k, not much you have lost. That's okay, Rajat. You can always get this money back. And I don't see, since you said that you are in the market only for last 4 months, what sort of things that you do? Do you do equity? Do you do option trading? What do you do, Rajat? So Vijay is also there. This is great. Good, Abhishek. I think great new financial year. Let's start off with a new challenge. That's okay. You have used the money for good purpose, so that's great. Hi, Sujata. Very good evening. Nice to have you again. So in equity, Tata Steel and Infosys, SBI, Ashok Leyland, all are great companies. Of course, you should know where the market is in, uh, because sometimes you enter at the wrong time. Market is on a downtrend, it's on the reversal phase, you entered in. So there are many things to learn, Rajat. Don't pump in all your money, stay. Learn from this next 2 hours and see how you can better deploy and manage your risks. Okay. And people who are holding a position in loss, okay, this session will be really, really useful. I'm not just saying this uh, to hook you up and make you watch this, but the whole point is, um, as we discuss each pointers, you will realize, yeah, this is where something that I have been, not focusing upon, or probably why it didn't occur to me, why sometimes my emotions are getting triggered. Even though there is a no buy entry signal, we sometimes take position, right? Our trade setup says that no trade available, but still we feel that something is missing. We go ahead and then place some at least 50 quantities like that. Then what happens? We keep on averaging, and then ultimately it becomes a losing trade, right? So eventually, a lot of details that we will be learning, right? And we are almost about time. Let's give people some extra 2-3 minutes. Some would be just signing off from their office, just joining in. People are going to come in, so let's wait for a few moments. Hi, Sunny, welcome. Very good evening. Nice to see you. So in downtrend, my most of my money consumed in averaging. Yeah, happens. So Rajat, there are a lot of things one should know before we take in and deploy our capital. Fundamental analysis that you should be doing, uh, technical studies that you should be aware of. You should be aware of moving averages, various types of moving averages, RSI, other technical indicators that you should be knowing. And hi, Inderpal and Saria Mohammed. Very good evening. Welcome to the stream. Uh, just please take the no, privilege of sharing the link with your friends, and the more people joining in, the more discussions and questions. So it will be fun, right? Uh, of course, you can go ahead and then hit the like button if you can. Uh, So we are going to learn a lot about money management, risk reward ratios, and also how you can remain calm and manage emotions when things go wrong, right? Sometimes we enter into a trade hoping that everything will be in our favor. Then suddenly we realize, but obviously market is going the other way. Oh my God, is it really going down? Is it really going down? And then you keep on averaging. At some point, you would have really taken a size that you never planned, right? So that happens a lot. Hi, Luffy Ichigo, welcome. Really happy to see a lot of new members joining in. I'm glad that a lot of new people are here. Uh, should we wait for about a minute or should we get started? Do let me know. because I see new people coming in. Uh, as you people suggest, I can go further. Okay, hi Alex, welcome. Yeah, let's get started. You joined the market for investment, but now switching for to swing trades. Okay. Uh, so did you let everyone get benefited? Sure. I think 2 minutes we will wait. Okay, 2 minutes because time is now 6:03, 6:05 we will start. Right. Yeah. Our last 2 minutes we are going to start off, and I can see like a lot of people joining in. Good thing is it's getting recorded. Even if you're missing out some parts of it, you can always watch the video online and check those particular topic which you missed, or maybe if some topic was very interesting and then you want to rewatch it, it's always there. That's why we are doing this live session. Okay, 1 minute to go and we are starting off. Thanks, Sunny. Sure, Vijay. Thanks for the personal message. I really appreciate that. This sort of feedback. Even before we get started, people are really wishing the session to go well. So that's really kind of you, Vijay. I think it's time. It's about time. Let's get started. And if somebody misses out, that's okay. Let them rewatch it. Uh, we don't want to waste time, and we should also respect the times of others. Let me see if the full screen is visible. So do you see the full screen? I don't think so. All right, let's do this. Right, okay. Welcome one and all for the session Trading Psychology and Disciplined Habits. Here we are going to learn some of the important trading disciplines that one should have. A lot of people aspire to be a professional trader, right? They have been doing their work. Somebody is a student, somebody is a commerce student, somebody is an accountant, chartered accountant, somebody is a doctor. Everybody is a professional in their own sense, right? And you didn't become a professional just because you cleared some exams. You had certain disciplines, you had certain practice, you had certain aptitude and mental faculty to become a professional, right? And this is no different. This is also a serious profession where you are directly dealing with money. In other professions, you deal with a service or product, and then basis your surveys and experiences and all the kinds of feedback from people and how you did through the year, you will be given some sort of increment, given some sort of promotions, and that's how your money grows in other profession. But here you stay disciplined. Each and every day that you are disciplined, you make money, right? So trading is a different business altogether when it comes to money. So how do you sustain your money? Whatever you have, maybe somebody has 50,000, somebody has 1 lakh, 5 lakhs, 15 lakhs, whatever it is. How do you ensure that it is protected? And how do you grow that capital over time, right? It is a bigger responsibility. So a lot of times we live in the fancy, or probably a lot of you would have entered into the market with a fancy idea. Let me just, I'm much smarter than most people. I know how to learn, things. I have the knack for it, and I'll quickly, make money. That's the mindset with which beginners enter in, without any sort of, education, without any sort of discipline. Nothing they know. They just have money. They pump in and lose it, right? But Westerners are different that way. They will not pump in their money without doing a basic, study. But we work the other way. We just bring in the money, hit the wall, learn in the process, right? That's why a lot of people, more than 90% of the retailers lose money because they don't have foundational knowledge. And most importantly, what they lack is complete trade discipline, right? So we are going to explore what are those disciplines that one should have and one should learn and practice, not just once you learn and then you forget it. You practice, you live with it, you breathe with it, you place the orders, you exit the orders, you enjoy the benefits that you get, all with discipline, right? Your entries, all these things that I mentioned, your entry, exit, stop loss, profit booking, risk reward ratio, everything is a set of discipline, right? And that is what we are going to learn in the session today. And before I continue further, do let me know if there are any further questions. So I assume that there are no questions. Let's get started. We have, all we are going to do is shift our mind's perspective. So when I say perspective, each one looks at the market in different ways, right? But there are few things that's very common among successful traders. Successful traders don't operate, the professionals don't operate from profit mindset. They don't think that how much money I made. Their profit earning is not the definition of how good they are. They approach the market. In fact, they became pros. They became big player by adapting something called a learning mindset. What did I learn? What did I earn is fine, but what did I learn today? And every day, these collective learning is what is converting them into a stronger, professional, right? So shift from profit mindset to learning mindset. Now, a quick question: how many of you become so restless when suddenly you entered into a trade? It was in profits, okay, about 500 rupees. Suddenly it is showing minus 40 rupees, okay, minus 50 rupees. What immediately happens to you? Let's be honest. So Abhishek adds position if he is very confident, okay. Oh, Sunny is absolutely spot on. He says that as a human being, the very first emotion is that, both doubt and fear. He starts to doubt whether am I, going to lose something here? Is this really okay? So some sort of, doubt. Is my entry wrong? All sort of, questions comes back and then hits you, right? Okay. So Kempegoda immediately exits before it turns into a big loss. Okay, right? So three people, three different reactions, right? Now, how do we find the balance? How do we ensure that we are having that calmness while position goes wrong, right? Um, that's very important, and you cannot really your decision it is whether you want to exit, you want to average. All these things are right, all are right answers, but it should be a planned trade. Okay, if you are going to average, not that it has become minus 40 that you wanted to exit, you should already know when it touches 40 I'm going minus 40 or minus 100 rupees I'm going to exit it. It should be a part of your trade plan by default, right? That stop loss, or probably you feel that yes, this is another round of average that I want to do today, and exactly here I wanted to do it, and I have been waiting for this opportunity. Then people like Abhishek can go and then take more positions. So what I am trying to say is that no trade should be unplanned trade, right? If tomorrow I want to do the trading, today you should do the homework. I should put all my learnings from today, understand, analyze, everything should be ready in place, and then I will do my entries and exits only at the place that I have already predetermined, not after I took a position I will decide where to exit, where to enter. Okay, please note that. It's very important. Okay, and then ask yourself after you make big loss, no trade, some simply you are watching the market, what did you learn today and how am I better than yesterday? This is a very important question. A small reflection is needed, right? A lot of people feel that these things are impossible. Maybe today we are in a session, I will do it, and once the session is over, I will have to I have to focus on what our world market is doing, where I will find my next opportunity, when the market will open. That is the natural mindset with which we operate. And trust me, when you focus on what you learn on a given day, right? Yes, next day when the market opens, you are not in a compulsion. See, you can be there. I will show both my hands up. Tomorrow you let the market go up 500 points, down 500 points. You say that Satish, can you trade? Can you not trade? I will of course not trade. I will simply sit and watch, because for me, market opportunities always exist, just that I don't have to jump in all the time, right? And sometimes it happens, right? Why should we take positions in which your attention is needed every second, right? You don't have to put yourself into that pressure, right? So make sure that you are learning something new every day, and then only when your trade setup gives the signal you should enter, not by speculation, you hoping that yeah, it might cross. If it might cross, it might also come down, right? So what is that signal that you are waiting for the confirmation? Have a proper established trade setup. Okay, and then this is one of the big challenges. People who lose money are emotionally hurt, and what they do is they try to average, and then they try to average, and then you go on saying that no, this can't be happening to me, I cannot be losing money, and then you go on with a belief system that you cannot lose, your ego is triggered, and then that is the day that you make your big losses. Just reply in the chat, how many of you had bigger losses for your capital size in last 6 months, and on that day were you trading the usual quantities or unusual quantities? Just that alone I want to see. What is your response? Okay, some comments are there. excellence in that. That's right. You doubt your entry. Paresh doubts his entry. Sujata is also like beginning to doubt their entries. That's right. So Vijay says me unusual quantity. Yeah, unusual quantity, and me too. Right. The day that I lost lakhs were the days that I have taken unbelievable quantities. Never in my life I would have taken so many quantities. I would have taken so much that suddenly feel like cheated. That has happened. The bigger the quantities, that's the day I made my life's biggest losses. Okay, 5 lakh loss. Saria Mohammed. It takes really a brave heart to share that in open forum. Thanks, Saria. Made about 14 lakhs on loss. Oh my god. Oh my god. So all are unusual quantities. So we should have a trade setup. Some mechanism has to be there. If this is my capital, what should be my maximum quantity on a intraday basis? You should have a clarity on that. If you don't have a clarity, whatever happens on earth, I am not going to cross this quantity. 500 quantities maximum of. First I entered with 100 quantities, next I did an average with another 100, then I entered with another 100, then last 200 quantities, all put together 500. 500 means 500 max. If 100 is the maximum that you can deal with, then only 100. You should always have a strategy of how you're going to do your averages. Let's be honest, okay? There is very rarely that you entered and then that gives you a profit. Option buying is a game of averaging. Let's be honest with that, okay? And because market need not have to follow what you think, right? And then everybody is speculating. Most of the people are speculating. A large chunk of them have no idea whether it is going to go up or go down. There are selective 10% of the people who do proper analysis, who read all the cues and then initiate positions. Just by the sheer volume of people who are ignorant, they are just going on dumping, and for which the market may slightly start moving in some direction, but then the big players, which are like only 10%, actually regulates the market. So always be sure of how much quantity that you want to enter, and I'm going to talk about that as well, like how you can decide how many quantity is enough, right? So here is another thing. Establish a trade setup free from emotional triggers. What do I mean by that? You would have seen me, right? In the live stream, I said I have taken some position and then suddenly there is some call. I walk away from the screen. And maybe my baby is crying, I go and attend that. Or probably there is some sort of urgent phone call that comes, I go. Or whatever it is, some 10-15 minutes I'm off the screen. Sometimes even half an hour I'm off the screen, right? And I'm not worried about what is happening with the market. Why? Because I'm going with an assumption, okay, when I'm not on the screen, if there is a 100 points loss, suppose I entered Bank Nifty at some 500 rupees, if it has become 400, right? I am losing 100 points. When I lose that 100 points, what should be my quantity that I should be holding, even if I'm not watching, right? So if it is say 50 quantities, I'm losing 5,000 rupees, and I'm very, very sure for my abilities and confidence that I have in the market and the capital that I have, 5,000 is not a big deal. I can choose not to see the market, okay? But if I am having 500 quantities, do you think I will be still having that, calmness and freedom and then just, enjoying everything? Of course, it's impossible, right? It's not humanly possible when you oversize beyond what you can usually handle and then still be calm. That's not possible. So identify what quantity actually gives you that sort of, freedom from emotional trigger. Right? Let's check 1800 quantities. Bank Nifty expired to 0. My goodness. Very sorry about that, Siddharth. I can completely relate. Happened several times with me as well. Lost on smaller quantities. I was waiting and hoping market would reverse. Yeah, that was years ago. Cool. Now, any questions so far? So how to identify that quantity, I will tell you. I will give you some sort of formula. In fact, one day we had a call with Sunny, who is also part of the call. I told him how you can choose that quantity. I will share that again here. Losing money made me understand don't enter when you are afraid. Yeah, sure, Abhishek, that's very rightly said. So Sujata ma'am doesn't trade more than one quantity, so that is fine. So that's the discipline, right? Like she doesn't want to trade beyond one lot. That's great. Also, there are certain guidelines. I will talk about each of it as we go further, because in one slide we cannot be covering all. And then we should learn to move from fear of missing out to entering with confidence, right? Sometimes I just enter under quantities because of two reasons. One, maybe that entire week I would have made some nice money, and then there is a worth taking some risk at some point. I would take that, not because I have made a lot of money that I should enter. I feel that okay, the risk and reward ratio is so high that even if it becomes zero, I'm losing only a part of my profits and still I am profitable. When I have those sort of entries, then I take it with confidence. One. Second thing is that my position is completely edged, irrespective of whatever happens. If, let's say, today whatever position I am holding right now, tomorrow there is a 1,000 points gap up, happy. 1,500 points gap down, happy. 500 points up down, happy. Market stays there, I am happy. Only thing is that if it stays there, I would lose about 1,600 rupees to 1,800 rupees. That is the only thing. Now, this 1,600 rupees is not a big deal, right? And you take strategies that gives you confidence. So either the market has went so well in your path that you are able to deploy a small portion of your profits and take some additional risk. That is when you can enter with a lot of confidence, or you have a trade setup that ensures that you have very minimum things to lose but a whole world to capture, right? Those sort of strategies are the only two options in which you can make money and feel confident in the market. So if you want to feel confident, there are only two things. One, if you have already made some profits somehow and you're taking some risk in that profit, you will be very confident. Or you have a trade setup and strategy that is giving you very minimum risk, or risk that you can accommodate and accept with whole heart without any sort of becoming emotionally burdened. And the rewards, if it is rewarding, then it's great reward. Yeah, fantastic. So please remember, everybody wants to be overnight Ambani, right? You want to become super rich overnight. And that's the mindset with which 90% of the people trade in the market, right? You cannot become overnight superstar, okay? And the more that you try, the more you will become debt oriented person, okay? You will be falling into deeper debts. Don't try that, okay? Learn something, find your strategy that gives you low risk and maximum rewards, okay? Now, the only fear that is worth having is to breaking your trading rules. Oftentimes, okay, let's be honest, you would have made some loss, okay? Then you didn't sleep that night, or probably, it's not letting you sleep. And then maybe you opened your laptop, did some sort of Excel work, reading all the stock market, global data, everything, and, wanting to capture that loss on the next day itself, right? And so far, you are of the discipline, I will not trade more than 4 lots. And very next day, after your losses, what happened? Also talk about that. Have you stayed with your rules on the next day after the big loss, or you continue to break the rules? Let's be honest. Sunny is making some good good fun there. Okay. Oh, Vijay says that he is afraid of that fear of missing out is there, and exactly then he loses money. Okay, I asked a question. Those days when you lost big money or some significant money, what happens on the next day? Always breaking the rules, right? Okay, Kempekoda says that always breaking the rules. Okay. Yeah. So for he will Vijay says that he will be normal for next to a couple of days, but then on the third day or fourth day he will deviate from his trading rules that he has defined. He has defined for himself. Okay. So typical, very 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 common thing that happens with us, right? My suggestion is if you have lost something big, right? Skip that week. The skipping that whole week. Suppose you lost money on Monday, come back only on next Monday. Okay, take that as your 1 crore challenge. Okay, if you have not traded from the day that you lost for the same day to come next week, until then you don't trade. 1 week you take a break. I'm sure it's as good as you made 1 crore. Okay, because that's the kind of, it looks very very ordinary challenge, right? But try it. You can't stop trading, right? So that's where the maturity comes in, right? You big players always evolve over their emotions, right? So let's quickly check. Yeah, absolutely. Capital protected, capital saved is capital earned. That's right. So sometimes what happens is, let's say you had about 5 lakhs capital, something went wrong, right? And then you lost about 80K, right? 80K is gone. Eventually what will happen is, say that you have taken a put position, it has gone up like unexpectedly, it has gone up like 2000 points over the last week, and then you have lost some 80,000 rupees, right? Now what you would do, right? People will become very aggressive. They will buy, say, 500 quantities of deep OTMs, hoping that the market would fall, right? And to our surprise, market coolly moves 200, 300 points up, right? Just blowing out our capital, right? Add to that, you would have made another 50K loss. And to cover that, what you would have done, you would have pumped in some 1000 quantities at something you were buying at 400, now is trading at 80 rupees, will buy 1000 quantities, 1500 quantities. Eventually, within that same week, you will blow out your capital. Trust me, what will happen? The following week, market will come down to the same place. And if you have not traded at all, the original position that you booked loss would still be in profit itself. That's the kind of madness I have seen. Okay, so revenge trade is what it is. Like Sunny says correctly, that is called a revenge trade. So the reason why you are breaking your own trading rules is that you are saying that either it is you or me. You are telling that market either let's see whose ego is bigger. First of all, we don't have the capital to say such a statement to the market, right? Neither of us, even all collectively put together, we don't have say 100 crores, right? And the market, there are people with 10,000 crores, 20,000 crores. They themselves are not challenging the market like this. But we will be having only 50,000 rupees or 5 lakhs, but then we will be saying, no, either it is me or you. So we have to really mentally mature and say that I am here to interpret the market moves. I am not the market, I am not the big player. Remember that. Okay, so these are the shift in perspective that you should have. Right, I spent a little bit more time on this because the next slides are relatively easier and we will move faster. But before those, any questions? Quickly, any questions? Okay, let's move on. The next part is discipline. First thing is that, do you have a trading system? Okay, when I say that do you have a trading system, it's not about the computers or the internet. Do you understand what is a trading system at first place? A lot of people don't even understand the term trading system. Okay, you need to design your own trading system because each person is very much different. Suppose I might have 10 lakhs, you might have 10 lakhs. I might have full of EMIs, full of loans, full of debts, and I might be responsible of generating say about 2 lakhs a month. Okay, I want to generate 2 lakhs a month to feed myself and my EMIs. And probably you are somebody who has 10 lakhs, but you have no commitments, you have a own house, you have everything that's coming from your salary. Now, the risk that I should take and the risk that you should take with the same capital is different, right? So, my needs determine my trading system. Okay, so sometimes whether the trade system is risky or it is safe, that's a question. Okay, everybody eventually will have a trading system. Okay, maybe you follow some EMAs, you follow some sort of MACD crossovers, divergence, some sort of indexes that you follow, some sort of price actions happening, some trend breakouts, all that you are observing, and maybe you have your own entries and exits and stop loss. That's great, but how effective is it? How risky is it? That's the principal question, right? Abhishek has asked that should we keep a tab on the losses? Once the market has swallowed, it has swallowed. Okay, you need to see what is left in the market. Okay, there will be a day you have 10 lakhs and then the next day you see that your account is having only 3 lakhs. You need a different mindset, right? 7 lakhs gone in the market. Now, market has swallowed that. Don't say that, oh my God, how do I make this 3 lakh into 10 lakhs? Of course, the same day it will become 30,000. Okay, so, and then that will be wiped off. So don't worry about the losses, but keep a tab about the losses, and you don't have to do your loss calculations during the market hour. You should do it in the month end, some Saturday, Sundays. Okay, you check all the P&L statements when the market is not there. When market is there, don't even think about P&L. What can I learn? That should be the focus, right? So never bring your profits and loss when the market is on. One of the reasons why I don't post screenshots is that it will trigger people. It will even trigger myself, right? One day I am posting a loss, then next day I am taking a burden of wanting to be profitable, because otherwise people will lose trust, right? So I'm pressurizing myself, and then I will have to take some unwanted risk, unnecessary thing, right? I don't have to do that. Rather, just say how many points you captured, how many points you lost. Okay, you say that I made 50 points today. Good, that's a good enough. So, designing a trading system. So, what are the factors that should go in? What is your deployed capital versus total capital? I might have 10 lakhs, but I am not going to deploy more than 25%. 2.5 lakhs is the maximum that I'm going to deploy, means that is the ratio that you should have in mind. And then I might have taken some 10 positions and exited 10 positions. What is the winning trade and what is the losing trade, right? 7 wins, 3 losses, that's fine. Now, 7 wins with small gains, 3 losses with big loss is pointless, right? So you need to have some consistency. And how you can do that? By better managing the risk reward ratio. So what is the risk reward ratio? As you enter, you would have seen me drawing the lines, right? Maybe guys, you can enter here, but this should be the stop loss. That should be the stop loss, means you should exit. That's it. Today, one order I exited just because it breached, but then I found another entry and made something. But then basically what I wanted to say is that you should know when to exit and what is that risk and reward that you see, and then is it okay with you, then only you enter, right? Say for example, a lot of times what would happen is from the morning you would have made some 3,000 rupees. One last trade would have given you 500 rupees loss. Okay, 500 rupees loss. 3,000 you made from morning, one is giving you 500, but we will not accept it. How can I convert this 500 into profits, right? Bring this one into profits, we average. Then that loss becomes 1,000. Then you go on averaging, and then there is no risk reward done properly, right? Accept the loss. 2,500 rupees is also 2,500. No, who is going to give you that money, right? Somebody goes and then works in an office at a decent salary, say about 7 lakhs. If you compute what they are earning per day, 2.5 thousand rupees, 2,500 rupees they are earning. And you have done it sitting at your own comfort in AC, and then with family around you, food, TV, Netflix. What more you need, right? Be reasonable. Manage your risk reward. Then the best thing that works is equal order quantity system. Okay, what do I mean? At every entry you should not be changing your order quantities. Like you are somebody who plays with 50 size, okay, 2 lots only you enter, then every trade should be the same way. Okay, like the winning trade should not be like 2 quantities, and the losing trade should not be like 10 lots. This is winning trade is only 2 lots, but losing trades are like 10 lots, 20 lots, means pointless. You can if you do the win trade versus losing trade, yeah, 70% win ratio or 80% win ratio, but net what you gained, I lost 50k. No point. It doesn't make any sense, right? So use all these factors to define your trade system. For example, if I have to place 10 orders with 8 wins with 1 lot, 2 loss with 10 lots, or which one is a better system from this? Hi Leo, welcome. Which is the better system in this according to you? You have 3 different systems, 10 orders, all are 10 orders. Here 8 wins, 1 lot with 1 lot, 2 loss with the 10 lots. Here 8 wins with 1 lot, 2 loss with 1 lot. Which one is better? Okay, for Sunny, second looks more ideal. Okay, Leo also says that the second one is more ideal. Yeah, principally everybody agrees that second one is where you are very comfortable and ideal, right? See, anytime the order now changes, like 10 lots, why you entered here at 10 lots? Because you lost 8 trades and you are emotionally triggered. That's why you went with the 10 lots at first place, right? And then that actually won and saved. But you should not be happy about this, because this is like your gravestone. One day you have got this habit, you tend to forget all the trade setups, everything, and then go madly with 10 lots from there on. Because that day it worked for you, you will start believing that I can always get out of the trade, whatever may happen. That is really the gravestone placed on your trading setup. Okay, so third one is definitely a no. Second one is the best. Yes, Praja. In loss we are waiting comfortably, but in profits we are booking too early, right? So yeah, let's talk about that. Let's talk about all of that. In fact, I am going to go a little faster, because lot of things to cover. So now trading system means, yes, one part is that capital, win ratio, risk reward, and entering with equal quantity or different quantity. For me, the formula is very simple. What I do is 100, 100, 200, and worst case 500. Okay, that would be it. 100, 100, 200, 400, all put together 900 maximum. That would be the thing that I would have invested. But if I am doing that, that will be in a next week expiry, some contracts that is trading around 200 rupees only. Then that is a different setup. I do it on a Friday for a specific reason, because that works for me. I have a trading system that works for me like that. Okay, that is the only system in which I have 900 orders in my quantity. Otherwise, my entries are 100 quantities, then 100, and then 200. It stops with the third average. I don't go for the fourth average any further. So 100, 100, 200, right? Sometimes I go 100, straight away 300, no further averaging. So one of the systems that I use, right? So depending upon where the market is, what sort of entries are required, basis which I will do that. Okay. So second one is the best one. Okay. Is it advisable to trade with higher lots? So what is higher lot? Higher lots means what is your capital? Then you can say whether it is a higher lot or not, right? For example, 900 quantities with a 3 lakh capital is extremely high. For a 5 lakh is high, but not in comparison it is so high for a 3 lakh capital, right? For 3 lakhs, 900 quantities means too high. 5 lakhs is still high only. 10 lakhs, yes, still higher. 20 lakhs, not so, right? So it all depends on your capital, and I don't sincerely advise you to play with the volumes, because for what I would advise is take a 2-year challenge. Okay, in 2 years, don't change your order quantity, go consistently with the same capital, double the amount, exit it. Third year, reward yourself by increasing 2 lots extra or double your quantities, but do not change it in between. Okay, it's going to be costly. Just a moment, I have to pick some tea. My mom is calling. She will just give me one moment. Okay. All right, I'm back. Sorry about that. Let me check if there are any comments. I'm checking from the phone. Right. So let's get going. Okay. You need to, apart from your capital and risk management definition, all these things, you should also be very scientific, right? You should, just because people are waiting when it will become 9:15. How many of you are here waiting for 9:15 to happen? Please raise your hands in the chat. Okay. or you say yes or something like that. Yes, no. If you are someone who waits, who is longing for the market to open, um, it's not a good thing. Okay. If tomorrow market is a leave holiday, or you have some sort of commitments, you should not be a compulsive trader. Don't wait for market to open all the time, and that shows that you have become a compulsive trader. Trade because you see some signal. Trade because your system says that yes, this is a good entry point. Not because the market is open, you should trade. And how you can improve your systems? Yeah, yeah, you wake up at 8:15. So there was a time where I wanted to really curb this urge, and there is one technique that I did. I was serious. There was a time, series of losses happened. Like whatever you do, like straight 10 days of losing streak, completely capital is disappearing from the system. Emotionally hurt, don't know what to do. Then there was one habit that saved me. I forced myself to watch Netflix till late in the night, and watching some series actually diverts your mind. Although flashes of losses comes in the mind, still it's occupying you. Then I sleep somewhere around 3 o'clock or something like that, and then set the alarm at 9:30, 9:45 like that. Then when I get up, because most of my losses have happened in the first hour itself. I see that there is a strong volatility, and then I wanted to capture that, and then I enter like 500 quantities and all these things, and then that loss initially itself is giving you something like 25k, 30k, and to average that, and then it becomes bigger and bigger. So what I did was very simply, I should not be in the market in the first hour. So I used to get up and then get ready. Everything became so slow, and the time that I started, time would be already like 10:30, 10:45, and after that I find the market to be very easy. So when what started off as forcefully imposing myself with some sort of deviation actually became a very good control after some time. And there were times that okay, I will be sitting in the market at 9:15, simply watching the screen, not placing a single order for next 1.5 hours. In fact, people on live stream would have seen on many days that I do that. The reason is that now I have that control of not taking positions just because the market is open. So it's a discipline that you have to train yourself to, right? So what are the signals? Look for the breakouts, look for support zones and resistance zones. If there is any sort of candlestick studies that you have done, you know the patterns, and then it's a reversal pattern, it's a trend continuation pattern, it's an accumulation, a distribution, what's happening, and is it making any set of that bullish engulfing or bearish engulfing, what it is, and then what does it tell you, and where it is trading, the technical indicators, what are they suggesting, what is the price action suggesting, are they in the supply zone or in the demand zone. Assess all these things, and then if your system says that yes, this is a good entry, then enter. If not, stay away. And most importantly, if you are going to enter into a trade, let's say tomorrow you wanted to buy a CE position, okay, market is opening at 41,050, okay, now you feel like you wanted to enter into a CE position. Now tell me 3 reasons why you will enter, and you should rationalize with yourself why I am entering here. You should explain yourself. If you can't explain it to yourself, then you are playing gambling, not trading, okay. For example, if it sustains above 40-50, and then the OI data says that it's bullish, and then every first 5 minutes it's making a new RI, that is one click for me. It's trading above all these EMAs, second tick for me. Third, for every 15 minutes it's making a new RI, it's a third tick for me. So then I will enter, right? Then if you are someone, okay, market yesterday tested 41k, and today I think 41,220 Satish said is a reversal point, it will go there. No, Satish said, Santosh said, doesn't matter. who says doesn't matter, right? Did your system say, right? If your system doesn't say, don't enter, right? Even if God comes and tells you, don't enter, because you are money, right? Let's quickly check the comments. Then just for observation purpose only, tell how much are we supposed to put a stop loss, 10 points or 20 points, and out of the fiction, how to track it. Oh my God, which those things I teach in private sessions. It's a multiple time frame study. I will have to sit and then walk you through, and a lot of ways are there in YouTube you can find. But then what worked for me, I will share in the sessions, because there are different conditions and terms people use to define a demand zone and supply zone. So basically our FASP levels are all like so accurate because I go with a different technique, right? So that's why you will see sharp exact point, you will see some sort of reversals, and really those are the proud moments, right? So anyway, stop loss part is very important. 10 points or 20 points, what is that? What should be my stop loss, right? Let's get to that in a bit. But you should have a trading system. That trading system should tell you how much capital that you want to deploy in a day, and how you will, what are the risk rewards, how many winning trades and losing trades are okay, and whether you are going with equal order quantity or different order quantity, and then trailing the stop loss by holding the winners longer. So right, so that's how you can maximize. And this is one way to establish the system. The second system is to power it with data. You have a system, you have a computer, but it needs power, right? Similarly, you have a trading system, but it needs data. Data is the power, and that data is in the forms of breakouts, these technical indicators, and so on. And this is not the exhaustive list. I'm just giving you some examples. You can go on adding so many things to this list, right? So let's move on to the third one. Now, these are what everybody knows, right? Our risk has to be low, reward has to be high. It's all very easy to say, but can you create a system that is like that? Is a very big question, right? The biggest challenge in today's market is stop loss hunting. You place 10 points, it hits, 20 points, it hits, 50 points, it hits, right? So then I decided to create something called stop loss free strategies. I don't want to place a stop loss. I don't want market to take money from me just like that. Already brokers are taking, then government is taking, then stop loss is also taking, then why am I trading, right? So I wanted to have stop loss free strategies. Seriously, this part nobody will tell you. A lot of big players are able to hunt it because they don't place the stop loss. They are having stop loss free strategies, okay? But of course you need some reasonable capital for doing that. Some writings, edgings are needed to do this. Then focus on the quality over quantity, right? See, people are so obsessed with 10 entries, 20 entries. I punched in 5,000 quantities, exited 5,000 quantities. What is your profit? And then you say 8,000. Why did you even punch? The brokerage itself is like 20k. Your profit is only 8k. Then why did you even trade today, right? So quality is more important. Say that I entered at 4 trades and then I booked 4 trades. My profit is 10k. Superb. 4 entries, 4 exits, 10k. Then madly punching 5,000 quantities, 20,000 quantities, booking per trade 1 rupee. You are collecting. You better don't trade, right? So choose quality over quantity. And how do you do that? That again, when you wait for the confirmations, right? There are clear defining which is a no trade zone, which is a breakout zone, and only after it breaks this point I will enter. Only if it breaks below I will enter. That sort of strict disciplining will give you good quality of your trade than quantity of your trade. Suppose it is in a no trade zone, you averaged. It's coming down, still in the no trade zone, you still take more positions. And then it went up, you averaged. All the averages that you did in the no trade zone, 3 orders punched. Now fourth time it is coming down, actually breaking the zone, you are lucky. Otherwise, you have taken a poor quality trade, but still it got you rewarded, right? That reward is your curse. Your quality is poor, and then you make money, you should be upset. Okay, when your quality of trade is poor and you make money, please don't trade on the next day. From my personal experience, I'm telling you. Okay, let's check. Any questions? So design your system where, see, 2000 rupees is the earning potential, 2000 rupees is the loss. Is it a good system? Maybe that's okay. In a range bound market, pretty much fine. But 2000 rupees is your loss potential. Your earning potential is 1000 rupees. Is it good? Absolutely not. Say 800 is your losing potential, but 2200 you are able to make. Good. You are able to make better rewards than the risk that you are exposing yourself to, right? For example, today I am holding some positions. Tomorrow I am holding about 300 quantities, okay? 300 quantities on both the sides, put and call. But the maximum loss that can happen is 1700 or 1800 rupees. Tomorrow, if the market doesn't move anywhere, I'll lose 1700. But if it moves, say 500 points, 600 points, I'm going to make 20k, right? Now, what is the risk? 1000 rupees, 1700 rupees, reward for about say 500 points of move or 600 points of move is about 20. Now, that is 1:10. I am risking only like 1 rupee I am risking, I am getting 10 rupees. That is a very good risk reward system, right? So there are times where you can go and then find your risk reward, low risk, high reward strategies. That's where you should use your Saturdays and Sundays. Experimenting, finding what I should do. Is there any way that I can reduce the risk and then play around and do these things in the offline hours? Saturday, Sunday, people ask, what should I do? Design a system that is going to give you low, expose your capital less, give you maximum reward. So any questions? I just will check the comments I have been talking. Happens. So calm mind is asking a very important question. How do I define my daily targets on basis of capital if I'm using straddle? Forget about this word straddle. How to define daily targets? Okay, that's a very important question. Don't talk about strategy because a lot of people may have a strategy, may not have a strategy. Their trade setup would be different. So we'll not confuse them. Rather, we will say that how do I identify my daily target? That is something we can do, right? Of course, there are many theories. A lot of very commonly said is that target about 1 to 2% of your total capital, right? 1 to 2% of your total capital. You have 1 lakh, 1000 rupees to 2000 rupees should be your daily target. Not beyond that. If you are able to take that 1% every day consistently, you are king. Big players will salute you. You just tell me that, sir, I have made traded 100 days and then I pulled out 80% of the trade, I pulled out 1%, and on the other days I lost 1%. So 80% I gained, 20% I lost, net is 60%. That is 1,60,000 rupees. If you add 1 lakh, it has become 1,60,000 rupees. If you can do that, salutes to you. It's impossible to do that. Okay, so that's why people are throwing up an open challenge. You make monthly 5% net. You trade every day, monthly you make 5%, be profitable. That itself is a big success. Big players are throwing the challenge. So what should be your daily target? The problem is you have capital of 1 lakh. Now daily target is 1000 rupees. Let's say if I do it in a month, I will be earning 30,000 rupees. Let's say all 30 days exist, market is there, 30,000 rupees, right? But my requirement itself is 70,000 rupees. Now your discipline, you will think that okay, I will make 2%. See, it's not about just like that saying percentage, I will make 2%. You are going to risk yourself that way, right? And do you have a strategy that puts you at very low risk and still give you 2000 rupees? I am going to lose 400, but I will make 2000. Can you build a system like that? Then we can talk about what should be the daily target, right? You set whatever target you want, okay? But make sure that you lose not more than 1% of your capital on a given day, right? So you define what you want to earn, but what you should not lose is not more than 1% of your capital on a day. Oh, Sunny, that's very well said. Sometimes even a loss of 5,000 rupees is a blessing. You exited something with a loss of just 5,000 rupees, and have you continued holding it, it would have become 1.5 lakhs loss. You know, there are times like that. I think the more you play the quantity game, you will know what I am talking about. Mindless. There were times where I was holding some 15,000 quantities and all, like mad, weekly contracts, right? And you can't imagine what sort of losses that you make. Just lakhs disappearing in seconds in front of you. Okay, so we are talking that. So one of the common mistake people make is to wait too long in the losing trade and exiting too soon in the winning trade, right? Now, how do you do this? Very simple. If you want to build this discipline, start off with a consistent quantity. For example, keep discipline as a challenge. Don't keep profits. Keep everything else outside. Keep discipline as a challenge. Target for this particular week, I want to be extremely disciplined and enter trades that are only in my discipline, right? Based on my discipline. And I am not going to write down everything. What is your discipline? You write down. Say that I will not trade more than 2 lots, and every order will not be more than 2 lots. And in a day, I will not trade more than 10 lots all put together, 10 lots, maximum 10 lots. 2 I bought, 2 I exited, 2 I bought, 2 I exited. Total number of trades, not more than 5. You define everything, stick with that, follow for 1 week. Once that's done, second week, third week, 4 weeks you try that. Okay, why? Because you try doing that. What happens is, maybe you have a capital to buy 500 quantities also, but if you can keep playing with 50 quantities for 1 month, you have earned something far more superior than what market can give you in terms of money, right? That's called discipline. You have earned your discipline. Once you know how to play with just 50 quantity alone, then think about it. If something is trading at 100 rupees, if it goes up, or 100 rupees it comes down, maximum that you are going to win or lose is 5,000 rupees, correct? 50 into 100, 5,000 rupees. Now, for a person with capital of say 10 lakhs, 5,000 is nothing. Whether you see the market, you don't see the market, even if it expires 0, it's nothing, right? And for that gives you the comfort. Now, when you are holding only 50 quantity and then it is showing plus 500 like that, you will not book. Say that, or 10 rupees, right? Just let's wait. Then 20 rupees, then it becomes 1,000. Okay, 1,000, should I book it? let's wait and see. And then, suddenly there is a large spike, and then suddenly see some 4,000 rupees profit. Then you will say that, okay, now I will start trailing it. Then you will trail and then exit. Then suddenly you will realize, my God, how am I able to keep myself so calm when that, when 80 points moved, I still kept quiet and then I booked 4K. But if I am holding 500 quantities, just some 4 rupees goes up, immediately you book that in 2000 rupees profit, you exit. In that time, it will go like 80 points. You would have made some massive money, 40K you would have made, but you exited with 2000 rupees, right? So train yourself with small quantities to capture bigger points. This is very, very important. Buy 50 quantities, keep it for a long time, capture 50 points. That is one of the reasons a couple of months back I was having 200 quantities, and then I was able to trail it, and then I got 105 points in the live stream. I got 105 points. It was a surprise move, and I was able to trail it comfortably because I was used to capturing 40 points, 50 points a trade. So for me, 40 points, capturing 40 points, waiting for 40, 50 points is not a big deal. But for some of you, 8 rupees, 10 rupees could be really, really big challenge because you have been, impatient with yourself because you hold sizes beyond your acceptance levels. That's the main problem. Okay, let's quickly check. Right, any questions, guys? Okay. Hope there are no questions. Let's move forward. So this is what I was saying. You should do multiple time frame analysis. Sometimes what happens is that, Satish, the views that you are giving is confusing. Sometimes you say when it breaks this, it becomes bullish. Sometimes when you say that we are in bearish territory, sometimes you are saying that it is stuck in a range bound. Sometimes it is, going, you're saying that short term bearish, long term bearish, intraday bullish. How do I read all these things, right? What should I make sense out of this? See, understand each time frame will have different things. For example, maybe in 3 minutes it's all put together, it is going up like this. Maybe it is making an ascending triangle. Doesn't mean that it is market is bullish. Probably that ascending triangle is after 1,000 points fall, right? In a 1 day candle, if you see, the market would have crashed 1,000 points, and then this bullish move is not even 150 points. So which time frame are you studying? It's very important. The reliability increases with the longer time frames. Okay, if you are really wanting to look for directions in the intraday basis, 1 day and 1 hour is what I would really recommend. 1 month and all is extremely positional things. 1 month, 1 day and all is extremely positional thing. Like you are playing a next month end contract, then these things would matter. Even these 3 things would matter. Okay, but for intraday, 15 minutes, 30 minutes, 1 hour, 4 hours are all good time frames to study. So, and this is from my personal experience. The short term and the long term patterns will always outshine the intraday patterns. In intraday, it is making some sort of bullish flag or cup and holder. Some 5 minutes time frame or 15 minutes time frame is giving you some sort of, not 15 minutes, 5 minutes, 1 minute is all like saying some sort of patterns. But the long term and short term things are like cup and holder in the long term and bearish flag in the short term. Now, of course, the long term views will be respected than the short term views. That's what you should keep in mind. Now, so supposedly your trade setup for the day says that it is bullish, but the short term views are saying that it is bearish. Why many times I keep saying don't get into the C side. Market was rallying 1,000 points, and then I kept on saying that don't get into the C side, don't get into the C side. Why I was saying that is because short term and long term views are absolutely bearish until it clears a certain level like 41,000, 220, 41,500. These are the levels. Until it's cleared, I'm not bullish. It is in the bearish territory because you can also check what happened. It made such a peak, and then today was the first time, if you see carefully, the market fell so fast, like 5 minutes candle, consecutive 6 red candles. Show me in last 4 days when there was a consecutive 6 red candles, right? That itself shows how much of potential that puts can have, right? So always keep in mind things can go wrong and work with the assumptions. If I am going to enter, yeah, today is bullish, everything is all fine. Intraday setup is saying bullish, and then long-term study that you did, it's saying it is bearish. Now, should I buy call or should I buy put, right? Now, this is my only decision making thing. Honestly, this is what I do. What I do is that I assume, let's say I am entering into CE. The moment I entered CE, immediately the market falls 500 points, just one straight line. Is it okay for me? Maybe it is okay for me, but can I say that in the stream? I cannot put your money into risk, right? That's one of the reasons, however bullish I know it is, I'm not suggesting it because your money will be unnecessarily risked. Because my short-term view is bearish. I cannot suggest that on an open platform to say that go and enter CE. And then one single straight line, then I will have to misguide you. I'll have to say that, okay, do one more average, right? Now you will lose big. That's one of the reasons I clearly say we are in a bearish territory and the intraday looks bullish. Now you decide what you want to do, right? Right, most of the time I didn't realize losing trade and end up can I avoid this? Oh, nice Vijay. So most of the time I don't realize losing trade and then end up in big loss. How do I avoid this? See, you don't know when a trade is losing because you should have some sort of exit in mind. Suppose you are entering in to a trade. Why did you enter? Because there was a crossover, maybe EMA crossovers, RSI was very high, and then you felt that there is also big volumes coming up and there is also some candlestick pattern supporting it, and then some signal you got, and then it's indicating, right? Now if I'm going to enter, where is my stop loss? Probably the same moving average will be my stop loss, or the candles peak will be my stop loss. If you have not defined that and entered, you don't know where to exit, of course, and you will be losing money. So as soon as it touches, you define where you want to exit. Whenever I show you a graph, I always line, right? Draw the lines, say that you enter here and this can be the stop loss. The very breadth I say, you enter here, but this should be the stop loss. You enter here, this should be the stop loss. I mention that invariably all the time. I never say that you enter here, but not revealing where should be the stop loss. That I never do. You will always hear from me what should be the stop loss. For me, I will not place a stop loss because I have different mechanisms. I have my own ways of managing that. Okay. So anyway, a lot of time is getting going on here. You cannot strategize if you don't know where the market is heading. So do a good analysis, understand where the market is. See, these are, you do 2 days once, 3 days once. If there is no significant move has happened, even 2 weeks once you can do a time frame study just over the weekend. So just do this and then observe, take notes, mark where you expect the reversals to happen, everything, and then keep the system ready, right? So fifth discipline is that okay, this is done. Next thing is that play the trend. Okay, a lot of people would have heard that trend is your friend, right? I think this is one. Yeah, low risk, high probability setups. Correct. This is a repeat. Okay, play the trend. So trend is your friend, people say. But which trend is very important. right? I talking about 3 minutes time frame, 15 minutes time frame, 1 day, 1 month. So you should always go with short term and long term trends in mind, not with what's happening today, last week. No, always look with broader perspective and then take positions, right? Um, and also realize that there are zones like accumulation, distribution, consolidation zones, um, and then you should have different strategies for the different zones. Okay, in accumulation and distribution, consolidation, there are certain market behaviors demonstrated. You should learn from that experience what is happening, how the market is reacting when it reaches an accumulation zone or a distribution zone. How can I take advantage of it through my trading system? That's what you should be taking cue from, right? So there are also power zones. So whenever it reaches there, the action is always high, and then you can expect some fierce moves either side, because that's a zone where market is in a decision moment, right? And that's why I'm saying another 1,000 points of move is going to come. Even if you have lost some money in 5 days, you can easily make up for that just simply being bi-directional. Take both the directions. Initiate a long straddle. You'll be in profits. 1,000 points of move, guys. Come on. you can really make big money. Okay, a lot of questions there. Most of the time I don't realize losing trade. Okay, in Nifty capture 60 points. How to know today is writer's day or volatility day? It's a very good question. It all see today the market did not open. Yesterday, trust me, right? Yesterday night I posted the video, and what did I say? The first half it will consolidate, right? First half it's going to consolidate, and second half there could be a potential breakout, preferably on the upside. It's a 24 minutes video. Please listen to that again if you want to really know what happened today. Yesterday only I said, and day before yesterday market closed. Yesterday was holiday, and today market opened, and I was able to say that with decent accuracy that this is what is going to happen. So it's not about the day. It's about staying with the market so close. For years I am seeing what is happening, and then it's about your observation skills. Honestly speaking, it's about your observation skills than anything else. Whenever the market comes from a break and then it has already rallied something, now everybody is very hopeful. If it has picked up at the last moment and then gives such a powerful close, 700 points move happened, correct? Now everybody will be carrying CE positions, and that too thinking that there will be another 700 points move. People will go crazy and then initiate some positions, wanting to capture that gap up, right? Now from my past experience, I'm seeing that it should slow down. This is not correct. And then what would be the most logical way to trap people? I do some sort of reverse psychology and analysis and say that most likely that it's going to be consolidating. If it is consolidating, then what's expected? Premium erosion. And VIX being very low already, that is going to favor the writers. And of course, the first half was happening the same way that we predicted last night, right? And that was one of the reasons why I initiated a short straddle. Look at that beauty. 700 points market moved. Market closed around 40,800. And what position at 325 I took? 40,800 CE and PE I wrote and carried it overnight. Okay, so that's what I did, because I was very, very sure about my observation that in this particular scenario, based on what I have observed in the past and how the market has reacted in the past when there was a gap up or gap down and close, what would be the people's psychology. I do some sort of reverse engineering and then getting into the psychology aspect and predict that. Yes, that yes, because see what will happen is you take some. If I give a call, say that you buy here, then in Telegram, independent messages are coming. Then I will not be checking. I am in live market. Then when I see it, already a big move would have happened. Your losses would have become bigger. It becomes very difficult burden. Next day I feel really bad because I said some entry, you picked part of it, you did that, and then failed to do the other things. When you lose money, I lose a lot more mentally. Okay, that's why I don't give calls. If I give calls, it will be proper calls, and I will not even do it for free. I will make it a paid version, put only those people, follow up, and then I'll be doing only that, right? Otherwise, I'm not going to do that because this sort of entry, either I fully own the responsibility or I don't own it at all, right? So that's why I don't give calls. So we were able to predict the move based on that. Plus Friday is also expiry, right? So you will see all sort of games happening. Okay, let's go far forward. A lot of things. So the role of support and resistance, you should understand. What is support? Once it's broken, will become resistance. What is resistance? Once it's broken, will become support. So it can test at least 2 or 3 times. But if it is testing more than 3 times, it will become weaker support or resistance. Then the potential for the market to break that resistance and move higher, or the break the support and go lower, is very high. So market coming down and then takes support, goes up, again comes down, takes support, goes up, third time it is taking support, goes up, fourth time if it coming, the resistance, the support has become weakened because 3 times you are supporting. Suppose you jump into the water, okay, first time you go into the water, naturally due to buoyancy you will come up. Second time you will go, even whether you know swimming or you don't know swimming, 3 times you will come up and go down. Fourth time obviously you will go in. That's what it is. Okay, so support and resistance, understand how it works. The support means not lifetime support. Okay, so understand it works only for a specific period of time. Once it's broken, it acts as resistance. So keep that in mind. Okay, let's see if there are any questions. How to decide quantity for averaging? No, your trade system should include all the averaging. For example, when I said I will enter with 100, and 200 quantities, 400 quantities I am entering in, correct? And I work with the assumption that I lost 100 points on 400 quantities. 40,000 is my loss. Okay, I am prepared to take that 40k loss. My trade system includes all the averaging and then I decide that. So when I enter in with 100 quantities, I know I'm going to do an average, but not now, later. So my 400 quantities average, let's say 500, and my loss I can take at 400. That's how I decide for all the quantities put together. Not so your average, you decide how you want to do the average then. Yeah, Siddharth, actually there is a lot that's changing in the market. um, I understand what you're saying. um, See, weak means, suppose this is a resistance, okay, this is a resistance level. um, how do I draw? Okay, just freehand drawing is there. Want to draw and see. So I can use the chart, but then don't want to get there. Okay, let's say that this line is the resistance. Now, if it is coming here and then goes back, that's fine. But if it is coming and then piercing it this deep, goes up. Second time it is piercing this deep, goes up. Third time it is piercing this deep and goes up. Then this resistance has become weaker. For example, if it has come here, taken a support, goes back. Second time it comes and touches the top of it and goes back. Third time it doesn't even touch and then goes back. Then this is strong support, right? How deep it pierces matters. In the 3 times that it pierces, whether it has penetrated deep in and then retraced back, or it is just coming and then increasing and ascending. That's what will determine the weakness. Okay, so don't really want to talk more. This is a psychology based thing. Well, let's focus on that, because these questions will take several hours to complete them. Then one of the fundamental things, irrespective of what sort of trade setup that you have, you should have your moving averages to determine the trends, and they are the easiest ones to find the moving averages. Okay. Yeah, Siddharth, it's a very complex topic, and then we have only 30 minutes left. We should respect everybody's time. But definitely, I will try to answer that on a personal note separately. Or you guys can ping sometime. So if you have some questions, please send it across. We'll take it offline. Okay. Moving average is a very important tool. You should use that, and the higher the time frame, more is the reliability. And then you can actually use different lengths of moving average to establish a trade setup for scalping, intraday position, swing, or positional, right? And always work back test your trade setup and see whether how profitable it is. Test it quite often. There are also scripts available now. You can do many things today than 20 years back, right? So use the power of technology to your advantage. Tap it. Look for win ratios more than 75%, 80% is a great trade setup, right? So look at that and then use your brain. Sometimes scripts will not be creative, but your brain can be creative. If something is at 78%, maybe you cannot write a script to make it like 90%, but there are some adjustments which cannot be scripted, but you know how to do it with your basic understanding of the price action and improve the reliability, for which you can use an Excel sheet to track separately and then manage. So use moving averages as one of your important trade setup. Okay. So yeah, let's I will talk about it in the live stream combined. Please ask the same question tomorrow. We will discuss then. Tomorrow it's anyway going to be boring first off. Let's do it then. Okay. So just note the important points. Any questions you have, you keep it. We'll do it live stream. Okay. In that I will answer these things. Personal questions, one-on-one questions can be asked there, because there are about 30 more slides and we have only 30 minutes left. So understand, sometimes we say that this is the breakout, this is what cup and handle breakout looks like, this is the target, but then market doesn't care about it. It just goes the other way around, because sometimes you should keep in mind, it is the price movements are nothing but people's fear and people's greed. Somebody is greedy because they are in profit and they want to maximize it. Somebody is afraid, they want to not lose the money and they are pumping more and more. So there is a greed. The market is a battle between greed and fear. Understand that. Somebody is greedy, somebody is fearing. Both these people are clashing, and when these two happens, it outwits all the indicators, right? Sometimes the indicators can say it is bullish, everything. There will be one straight fall. Sometimes it says that it is bearish, and then there will be one short covering rally. then the indicators will change. When you refresh and see the OI data, it will turn bullish. That is all post month, right? But what is happening right now is a game between fear and greed. So get into the habit of reading the psychology behind the market moves than just seeing the technical aspects alone. Okay, this is one real art. It takes time to master. Okay, and how to master? uh, Carefully sticking with one index, you will know what's happening. um, if you keep switching too many indexes and too many markets, equity, then dollars, so many things you keep switching, it's very tiring to keep yourself focused, and you will not be able to read the fear and greed of people. You will see the price movements, you will say that wow, what a green candle, but you will not see the fear of people, right? The moment you start feeling the emotions in the market with price moves, and that's the day you are closely in sync with it. Okay, sure. Combine, thanks for your understanding. Let's move forward. So understand that when there is a large momentum and there is a gap is also an indication of momentum in that particular direction, right? So um, when you see a large candles or a large gap, it shows that the momentum is in that particular direction. Okay, and when you see a gap up particularly, it will not, if it is not getting filled in the first hour or second or 2 hours, then most likely the market will continue in that moment, pick up the momentum and continue in the same direction, and maybe the gap filling will happen days later or months later, sometime years later. Okay, but when you see a momentum or a gap created, if it's not getting filled in 2 hours, I'm talking about bank nifty, if it's not getting filled in 2 hours, most likely the momentum is going to continue in that direction. Okay, and that alone is not a good indicator. You should also learn to club it with RSI or any other momentum indicators that you have. Club it all together and then establish this. Yeah. So what we are doing here is we are building a strong psychology by using the existing tools. You have a momentum indicator, all you need is go into trading view. Fibonacci, you want Fibonacci is there, momentum indicators are there, RSI is there, right? RSI is one of the momentum indicator. Then moving averages are there. So every tool is available. Now we are trying to club it to our system, build confidence into our system, back testing it, and ensuring that we are our winning ratios are higher, right? You should have higher winning ratios, no doubt about it. You call it a system. That system should have at least some 70% of win rates. That's when the system is playable. Otherwise, it's not, right? All right, let's move forward. Yeah, this is another interesting thing to keep in mind. If you note any observe carefully, the first hour and the last hours are the time where market shows extraordinary volatility. And what it means is, if you are right in the first hour and the last hour, and whatever happens in between those 5 hours doesn't matter. The middle 5 hours you are in profits. First hour and last hour, if it goes wrong, maybe you are wiped off your capital also. But you lost in the middle 5 hours. You won in the first hour and last hour, and still you can be profitable. So use that to your advantage. So that's where the volatility is at peak. So a strong opening and a strong close is the highest momentum for trend continuation. Suppose it gaps up and then it continues to rally and then it gave a new high and then it closed. It shows a fabulous momentum in the direction. The trend is going to likely continue. if there is a strong opening and a weak close, right? It opens strong but then lost all its gain, then it's a indicator of current trends reversal. It got a weak opening, it opened down but then it gave a strong close, and then then it's a trap, right? Weak opening, weak close means it went up all the way and then it came down all the way and then neutral, it becomes indecisive, right? So please do note this. This is really very, very important. This is from my experience. You will not find it anywhere. Any questions so far? Quick. I see no questions. Okay, thanks Carmine for the confirmation. Let's move forward. This is one of my favorites. Use 200 EMA to keep trend in focus. One of the strongest. You just go historically, whether it is stocks, whether it is index. You go and check whenever something is trading around 200 EMA. Check what happens in the subsequent days. There will be a fierce moves. Either it will break up and then go fierce upside, or it breaks down and then goes fiercely downside. But the most important part is to choose the right time frame for your study. Okay, just choose the right time frame for your study, because that's very critical. If you are going to make a big decision based on 200 EMA, choose at least 15 minutes, 1 hour time frames, if not a day. At least 15 minutes to 1 hour should be the time frame in which you should check 200 EMAs, right? Most of the times a great move, whether it is good or bad, happens somewhere around 200 EMA only, right? So your reliability increases when you go higher the time frame, right? Now these are some of the small things that builds the confidence, right? So far you're buying, selling based on your own thing. Now every point that we are adding here should get into your trading system. How do I use 200 EMA to my advantage? How do I use 50 EMA to my advantage? How do I tap the momentum indicators into my trading system? So these are the things that's going to improve the confidence with which you enter into a trade, right? So the quality of your trades will improve when you are adapting all these disciplines into your trading system, right? Let's move forward. So less is more. Like I said, do not get into all markets, all segments. I think don't want to call out names, but then I know the person also knows who stays late in the night awake, not sleeping, and really not good in the long run. In fact, I have also said in the live stream, this is not good because this is going to take a toll on your health. One, second, as you age, the focus. See, suppose something bad happens in one market, we become super aggressive and then try to tap it from another market. It becomes really, really poisonous. I'm telling you. Okay, so so both of you identified yourself. So I was talking about Siddharth and Abhishek. They both identified themselves. Okay, thanks. All right. What happens is, let's say that you lost some 50K. Right now, you will be waiting for US market to open. Oh my God, I lost this money. Let me try to bring it. Naturally, maybe you're young, you're not having any commitments. When you're married, there are growing expenses, there are growing EMIs. Maybe there is no child that's growing up, and then life looks totally different. Okay, right now, when you don't have any commitments, things are very different. You will always feel that, yeah, I can make this up. But trust me, when you're fully committed to a lot of financial things, it will A lot of people I know, uh, in fact, I came in touch with one of the persons, I don't want to name. Um, they borrowed money like 10 lakhs, 10 lakhs, 10 lakhs, like that. They have got close to 5 crores from friends. And right now, the account value is 5 lakhs. Okay. They lost so big. Now, EMI, how they are going to pay, how they are going to repay, contemplating suicide. Okay. Please, this is very, very serious. Right. It's not about making money, losing money. It's being alive or dead. Right. So, less is more. That's very simple. Be an expert in one particular thing, then you will find all the cues. Once you mature, once you evolve everything, then the same discipline you can apply it in another market. See why I don't play in Nifty. I am focusing only on Bank Nifty because the reward in Bank Nifty is far higher than Nifty. But once I have understood all the discipline that's required to be successful in Bank Nifty, suppose let's say that the currency is paying much better than Bank Nifty, I will switch. Right now what is needed is that discipline. So I am focusing on the discipline and reward that would cater to my needs for now. Okay. Anyway, okay, all right, let's move further. Market is no straight line. Please do remember, everybody goes crazy when they see some sort of straight line up. They'll immediately start going on buying our CE, or if it is going down, people will take PE. Please don't do that. Always remember that market is ebb and flow. What has to go up has to come down, as what has gone down will come up. So it is more like a wave, right? So if it is going up, whatever high it goes, it has to come down, right? When it comes down, catch the retracements and then let the trend continue. Wait for the levels, identify where is the reversal points, where is the trend continuation, where is consolidation. All this knowledge that you have done, acquired in the previous disciplines, use that to your advantage, and then get into the trade. If you see a sudden spike, don't get into the trade. It means it could be a trap. All right. Like we said today, 40,800 it should not clear, but last close was above that, and today about 2 hours it was trading, and then the moment it cleared 900, I said now it's time to enter into C. I don't know how many of you were there. I was the person who was saying that go into the P continuously, but today I say that get into C, right? Although I was not giving very, very clear signals for obvious reasons. You don't want anybody to get trapped. But I took CE positions and booked, right? Because there are certain levels, once it's cleared, you know the direction is clear. So wait for those level clearances and enter with confidence, okay? So market is no straight line. It just moves zigzag, and that's particularly true with Bank Nifty. Vijay, 1 second. You have been very much worried about this Bank Nifty way too much because of its move. I think your fear is slightly over here, because for me, if there is the only reason why I entered into Bank Nifty was I was tired of doing equities. I am not seeing any movement at all. In 2008, I was trading. I was entering into Canara Bank, SBI. For it to move some 2 rupees, you have to take some 100 quantities, 200 quantities. For me to earn that 20 rupees, or 200 rupees, it used to be big headache. Then I saw something was trading at 16,000 rupees. I saw what is the name of it, Jindal Steel. And then every move was like 500 rupees, 600 rupees, like that. I just took, and then instead of buying 100 quantities of that, I got two quantities, and then it immediately moved like 500 points, and then I made 1,000 rupees. I was like, I started building a fantasy for volatility. So I love volatility. And the volatility is the only way that you can make money or lose money. Okay. If there is no volatility, you have to be a writer to make money. Right. So if you want to be in places where there is no volatility, means I understand you want to play it safe. But it also means that your capital is not going to grow faster unless you are a writer. Okay. Only writers want low volatility. If you are a buyer, you want volatility, right? So, all you need to ask yourself is, how do I tap this volatility to my advantage? How do I create system that favors the most for me? Right? That should be the approach. Okay, let's move forward. So embrace difficult trades. This is one of the complex things to say. I'll give you one example which I said. The moment it crossed 40,950, I said that okay, get into this CEs now. Now that's very very difficult trade. We have been talking for last whole week. Be on the put side. Suddenly I'm saying get onto the CE side. I know it is a very difficult trade. People are have already feeling the heat of holding a PE position, and now to come and say and take CE position means these are difficult trades, right? And obviously you will feel that maybe it might reverse 40k 41k, it will not hold, it will come down. But that's when you should think different. If it has cleared 40,800, definitely bears have lost the control. Now bulls will show their strength, and that's the reason I suggested to enter into CE, and those are difficult trades. If you embrace that, you will make quickly good money, right? So easy trades are almost always at the end of the trend, right? The market is going to come to a close of its trend when it looks too obvious, okay? When there is extreme fear or greed, and then market moves in a direction, see, pause when the whole market is confused, and then you feel the temptation, oh my god, it's rallying up, and then you are tempted naturally to buy. That's when you should stop yourself and then ask, what if it comes down, and what are the possibilities of it to come down, and where is the market heading? Suppose it is ascending all fast and then it is reaching towards 41,220, and I have done my analysis, I know that's a reversal point. For people who have not done that analysis, they will think that okay, 41,220 means 41,500 it will go. They will buy, and that's exactly where the market reverses. So back it with data, use the fear and greed to your advantage. Just if the whole market is feeling that it is a great missed opportunity if I don't enter into CE, then wait. Maybe market has other plans, right? So embrace difficult trades. That is, the market is not going to pay the crowd. Market is going to pay for the person who plays with discipline and thinks differently. Very, very important. So this is very simple. I am going to rush through this now. Sometimes what happens is you enter into a trade and immediately it becomes a winner. Like it is running into profits straight away. You entered 100 quantities, suddenly it's at 2,500 rupees profit, 25 rupees it has gone up. Now the best thing to do is equip yourself with trailing stop loss. Strictly keep trailing it and then let it run. Don't wait and don't place a limit order and exit. Okay, just enter in, just dive in, and then put a stop loss, trailing stop loss, and as it moves, maximize it, because the opening trades, particularly the opening trades, have fierce potential. Sometimes the market opens flat, jumps 50 points, then jumps 100 points, then suddenly 150 points, and suddenly that day you see 800 points it would have rallied. Okay, so you keep trailing the stop loss and then keep adjusting it, maximize your winners, right? That's one other psychological tool. Sometimes we feel so uncomfortable looking at profits because we are so comfortable seeing bigger losses. Sometimes bigger profits are undigestible for us. Use trailing stop loss for your entries. Okay, where particularly when it is a winner, keep trailing it. And never get into this op trade. You were holding some positions which is PE, and then it has gone into loss. Now you don't hope that it will come back. Instead, see what can I do in order to convert this into a no loss no gain trade. If you are already in loss, how can I make it no loss no gain? Do I have a strategy? Do I have a backup plan? Can I initiate some writings? Can I take some sort of unidirectional positions, something like that, but don't hope. Your hope is hopeless. Okay. And the faster that you are able to adapt, the chances of you to be right is higher. Okay. So, and another thing is that never average a loser. Okay, you can average a winner. Big players do that. Big players average their winning trades, not the losing trades. We wait for the market to fall and fall and fall, and everywhere we are adding positions. But I do it differently. I wait for certain levels of falls. I don't buy just because it's falling. I have a average plan, and I have also done buying averages as well, right? So you can add more positions when the market is in your favor. You can also average when it is going in your favor, against your favor. So just that the levels have to be predefined. You should know where you are going to do what. Okay, instead of just hoping market would go in your favor. Okay, any questions? I think let's move forward. Against the odd, yeah, I think this is one of the simple thing. Think differently. Sometimes it is that small risk that you take. For example, on an expiry day, right? On an expiry day, something is really extremely bullish. Everybody is like buying, and then the put value is something around say only 7 rupees, 8 rupees, and you have made some say 30k, and then you wanted to buy some 100 quantities, 800 rupees loss at the money that you are buying, and then you feel that it is going to reverse from this because it is a zone. You should take that risk. It's worth it. 0-0, right? Against the odd. But when you do it is all the question, right? You cannot be doing this at every trend. It's an expiry day. You want to do it, you do it. And look for ways to think differently from other traders. Okay, and use all the technical indicators to your advantage. And what happens is, you would have also seen me many times that people ask that when the market is going up, why are you on the PE side? When the market is coming down, why are you on the CE side? People always ask that because I always wear the hat of a contrarian. I don't see like what I just wanted to see what most people think, and then I think opposite of that. That's called a contrarian. I always hold a contrarian view. That's why lot of times people have asked, you would have also seen that in the live streams, when market is rallying, why are you on the PE side, right? So should be the risk and reward is very high when you are a contrarian. When you are on the same side, you are risking too much. When you are on the opposite side, already the premiums are done to death. Buy cheaper, and then if it works in your favor, it's a great reward, right? So, oh, sorry, I have to go to the next one. So, always remember, book your losses and take those stop losses. That's okay, because what's more important is confidence and your mental framework than money. In the long run, what pays you off is how confident are you are, and how much of resilience you have. Can you fight back? Can you bounce back? That's going to define the fate of your portfolio than the money that you make. So sometimes it's okay to book losses and exit and never average an unplanned trade. For example, you want to do some sort of euro zero, you entered 800 100 quantities at 8 rupees. If it didn't go, it didn't go, just leave it. Don't you saw it at 4 rupees, now buying some 1000 quantities, then you saw it at 2 rupees, now buying at 1000 quantities. That is unnecessary, because an unplanned trade you should not keep on averaging, right? So just don't take a psychological dent ever. Financial dent is okay, but psychological dent is going to kill us. Okay, so that's okay. I see. That's good, Siddharth. Trade in an unemotional state. How you can trade in an unemotional state? That is about sizing. You take a size that's not going to affect your brain, right? 2 lots, no damage. 20 lots, bigger damage, right? So take things there where you can just miss something, power failure happens, something didn't login issues, anything can happen, right? And still, can you be not affected by it? Take those positions. Okay, that should be the way to deal with it. So you should identify what is the right size that will keep you emotionally neutral. This is a very important part. This is the most important part. Determine a size that's going to keep you emotionally neutral. Okay. All right, let's move on. So this is the price action over profits. Here you should follow the process. You should see where is my entry, stop loss, targets, having a trade plan for 3 to 4 averages or adjustments. It's all part of it. You should also know, okay, here I'm going to enter my first trade. This is my first average, second average, third average, and stop loss. Beyond this, I am not able to handle it. So that's how you should plan even your entries and averages. Because a lot of times what happens, people, I always say that do the first average year, second average year, third average year. If you remember the streams that we did in the past, everything, first average, second average, third average year, you should go aggressive, everything I'll say. Because I have planned it. When I know that I'm going to enter here, I have planned it. But think about it. If you don't have a plan and then you bought something, it is falling down. Now fear comes. Oh my God, where do I average? You are panicking. On panicking that you are doing an average, you are not, maturing as a trader. Never average without having a plan. Okay, and then price action should be the reason where you should enter, exit, and then stop loss. Not I wanted to make 5,000. My daily target is 5,000. I should earn that. No, that should not be the reason why you should be entering into a trade. You should enter because there is a price action. There is a signal that comes out of the trade system that tells you to enter and exit. Right? So keep that in mind, and understand when there is nothing, do nothing. Okay, don't trade because you are bored. Don't trade because you have made some good money in the previous day. Don't trade because you are seeing that market is stagnant and then it is making you impatient. When there is nothing, you do nothing. Okay, so let's move on. Be reactive than predictive. So what it means is that trade based on what's happening in the market right now. Don't get into which means what is happening right now is the live data, the live moves that's happening, basis which read that and get the cues, than thinking, okay, if it has come here, maybe it is trading at 39,990, then it should definitely go 40k. Don't be predictive. Just see that it has given a breakout, then the W pattern breakout is above 40k, then yes, that's a good one. So your study should be reactive, not predictive. Okay, when you make a study, your study should be predictive, quantifiable. It should be referred, verified, and then analyzed by any person. That is when your study is reactive. Don't get into predictive mode. Okay, so that's something that you should keep in mind. My God, already we are at 8 o'clock. Okay, should we just move forward? Yeah, I think we can. It's not. Now, this is the most important part. See, a lot of people have a trade setup, but they don't have a backup plan, right? Now, there are days where I have made some losses, big losses, right? Sometimes you do some 50K. Now, suppose I have lost 50K from my capital, then all I do is I just go for absolute safe trades. I don't do anything else. I just simply go and then write some positions which I believe will really be the range based on my analysis, reactive analysis, of course. And then I do the writings, and the writings I keep adjusting and then get into the profit. I will not get into the buying business till I regain my capital. Very, very clear. That's my backup plan. I have a backup plan. If I lose a part of my capital, how do I recover it and when do I stop trading? That should be the backup plan. If you don't have that, don't trade. Okay, very simple. All right. Adaptability and flexibility is the key. Like that example I said, don't be so rigid with your views. Be flexible to adapt. Like again, I'm putting the same example. When the market broke 39,950, sorry, 40,950, said switch to CE, because it's not about accepting the defeat. It's not about accepting the defeat. I am not defeated. It's just that we have identified that 40,800 should be a good reversal point, and market has fought. It's not you and me fighting, right? Big players themselves were fighting, and then one of them were able to clear a level that gives a confirmation. Now we are there to interpret the market, and we have to be very flexible. Okay, these guys have said, okay, 40,800 is done, 950 is the base. Now they will go for 40K because that's a psychological number. Definitely that's a good entry. So being adaptable and flexible is very, very critical. No, it's not about what positions we were holding. Should be really flexible in closing and then accepting that loss, switching the positions. Being very dynamic is the only way that you can survive in a high volatile environment like Bank Nifty. So one of the reasons why Vijay may not be comfortable is that not knowing where to adapt quickly, when to change, and that takes some time. I can understand, but that is what the whole game is about. Can you quickly shift, or will you hold on to your ego? That's the big question, right? Now this is one of the things that you should ask. Self-awareness is absolutely the essence of a good disciplined trader. Okay, now ask these questions on any day. Have I done my homework? For tomorrow, if I want to trade, have I done my homework? Do I have a trading plan with some strict disciplines? Every day I'm putting this FASP levels and then the analysis. What is that? That's my homework. I've identified where the market can trade, where the reversals can happen, and if it is crossing this level, then what will I do? If it is breaking this level, what will I do? If it is going to be range bound, what will I do? And then what are my risks associated if I do that? And is there any risk that that is too costly than the reward? And then do I feel confident about entering into these trades? All these three possibilities: range bound, upside move, downside move. Am I confident, or I'm not so comfortable? If I'm not so comfortable, then I don't trade. If I'm comfortable, then I enter it, right? So this is the principal question that you should ask yourself. Am I aware of what I am dealing with for tomorrow, right? That's very important. Okay, a lot of people are afraid about the crisis. I am super excited if there is any sort of crisis, because crisis is where you can become rich, honestly, right? You get the right direction, you can make money. Like suppose you are holding a PE position when the market was trading at 34,000 in the month of February 2020. Next month contract would have been brilliant. You would have been a genius. You know what happened? Strikes went as high as 12,000 rupees. 12,000 rupees. A single strike value has gone to 12,000 rupees, 13,000 rupees. So crisis can be a boon. In COVID, a lot of people have become billionaires, right? From few lakhs, they have become crorepati's. So crisis can be a boon. Only thing is that you should always assess and take some quick actions, and then I mean, if some sort of inconclusive things are there, be bi-directional, right? You can just be bi-directional. Whichever side it goes, it's good. That's why we are entering into long straddle. If I don't know where it is going to go, but it is going to go somewhere, then why should I be getting into the business of taking the pressure of being right? If I am taking C, I have to be right. If I am taking P, I have to be right. Take both, you will be right for sure, right? So it's about that stress management. So crisis can be a boon if if you are bi-directional. Then sometimes there are some sort of events. Okay, people are expecting some sort of upside move. Suppose long term bearish, some positive news has come, everybody is expecting the market to go up, but everybody is focusing only on the event, but they are forgetting what's happening on the longer time frame. And that is one of the reasons why, even despite having a good news, the market falls, and quite often than not it goes the other way, other side of the sentiments. If market is giving you a positive news, it goes negatively. If market is giving you a bad news, it's going positively. Like 80% of the times, the reasons is because on a longer time frame, maybe the trend is on the other side, right? So okay, now there are only few ways that you can make a big money. Okay, on any day, if you are in this category, small profit, big profit, small loss, break even, good. But your focus should be to avoid big loss. See, you are not making big loss every day, right? Some days you are making big loss, and that day is unusual quantities, unusual positioning, wrong entries, going against the system, missing your discipline. These are the reasons why you are doing this. So if you are having the self-awareness, like we discussed here, right? If you are being self-aware, you will avoid this. Sometimes the great way to become a pro is to avoid big losses. When you avoid big losses, any of these results would do, and eventually you will become a pro, right? So keep that in mind. So again, we have discussed this so often, why it is important to protect the capital. See, do whatever it is. If you are entering into a position, assess the maximum risk, and is it okay if I lose this money? You have to be very, very honest to yourself, and ask yourself, maximum risk that it shows, you use sensible, you use whatever thing, it shows that maximum loss is 30k, and then profit is like 1.5 lakhs. You will think that okay, great, 30,000 rupees, right? But have you really considered, if 30,000 is gone from your system, is that okay with you? If you have not truly accepted it, then the profits are truly not going to come to you. Okay, so keep that in mind. Capital protection is the ultimate goal. Profits will be a byproduct. Okay, keep that. Then train your mind for rigidity and flexibility. Both are contradicting, right? You should train your mind rigidly for following disciplines. Be flexible to adapt to the market situations. So when the market changes its view, be flexible to adapt, but always be rigid when it comes to the discipline. Never break your discipline for temporary profits and gains. Have a system, follow that. The system will take time. It is built over years. Profits can come one day and then next day it will go away. What should not be lost for that is your long-term discipline, right? So any questions, guys? I know I'm going a little faster because there are a lot of personal commitments. I have to finish it. Any questions? All right, let's move forward. Yeah, and one thing is that, when the market consolidates, you should have a trade setup, and the quantities and the portions, position size are different for that. Most likely it will be different. Okay, and if it is trending, it is in a zone. See, I never carried a 300 quantities overnight, right? But now I am carrying 300 quantities. Today morning, before the market opened, I was carrying only 100 quantities and 100 quantities because the market condition then was different. Today it's different. So I switch my position size, right, based on the readings of the market. So you should have a game plan. You should choose different sizes, different strategies, different entry exits, trade setups for different market conditions. Consolidation, you should have some strategy. When it is trending, you should have some strategy. No single trading setup will work for both the markets. Understand that. Okay. So again, this was already talked in the opening itself. Stop loss should be 1% on the capital. Okay. Very simple. Work backwards to find your quantity. This is the part which a lot of people were asking. Now, how you go about it? Find the absolute stop loss level, right? Where should I exit my position? Bank Nifty is at 41k, and I am on the CE side. When I should exit? When it is breaking 40,800, I should exit, because that's a level that should not be broken. That is absolutely no. It should not cross that 40,800, but that is an absolute stop level for me. And then if it goes there, 41,000 CE is say about 100 rupees. Okay. Now my drawdown value is only 1%. I should not be losing more than 1% of the capital, right? Now 500 rupees it is trading at. If I'm getting 100 quantities, the market goes to 40,900. Already, from 500 it has become 450. Okay. Now 50 rupees is gone. 100 quantities means 5,000 rupees gone. Now my stop loss level is at 40,800, but I have taken too big a size that with only 50 points of fall, I am exiting the trade because my loss is getting bigger. That means you have taken a wrong position, wrong number of quantities, right? So you need to determine what would be the appropriate, including the averages. Where should I enter? You need to do a backward calculation. My optimal quantity, if it is 100, then first I will enter 25, next I will enter 25, and the third I will enter 50. Now that should be the way that you should manage, and then calculate whether it is going to hit your drawdown. Okay. So if you want this particular thing, you take a screenshot, or you want to come back and then watch the video, watch it. This is how you work on your quantities. Okay. All right. Then there are exceptional days, right? You should have a plan when something beyond your imagination has happened, and then is making some sort of wild consolidation or extraordinary moves on a day. Worst case, you should not be losing more than 3% of your capital, which means you have to structure and manage your positions in such a way that whatever worst thing can happen, I am not going to lose more than 3%. That's how you need to manage your positions. So regular thing is that not lose more than 1% of your capital. Worst case scenario, 3% on disaster days. Okay, like 9/11 happened, then tsunami happened, and some sort of bubble happened, banking bubble, IT bubble. So on any of those occasions or counts, you should not be losing more than 3%. So when you are on a constant losing trade, take a break, come back, start off with small wins, rebuild your psyche. Don't become aggressive on losing trades. Stop averaging your losing trades. Okay. And then when you are on a winning streak, right, add more positions and ride on to the trend, right, and maximize it by trailing your profits, right. So these are the two things. When the trend is working in your favor, add more positions, closely follow up with the trailing stop loss. It requires speed, of course. It would be extremely speedy, right? That's one thing. Second thing is that you have to cut your losses short and then exit. If at all some disaster has happened, you lost 3% of your capital, take a break, come back, build your confidence slowly and gradually, right? Then losers average losers. If you are going to average a losing trade, you are going to become a bigger loser, right? So don't damage your capital by taking, because it's cheap doesn't mean that you should take more quantities. So, and something has become too cheap, obviously nobody wants it, right? So if you are in profits, like I said, strictly go with trailing stop loss. Never leave the money open-ended. It can just wipe off in no time. Okay, so always keep in mind, when you are in profits, you should start trailing it. Then this is the last one, preparing for the volatility spikes. If it is making a huge spike in its mobility and moves pretty fast, then you should keep that into your consideration. Suppose there is a 1% move or 2% increase. Suddenly the VIX is moving from 13 to 15. Are you prepared? Ask yourself, for tomorrow, if there is any sort of sudden spike of 500 points, 600 points, am I prepared? That is very, very important thing to keep into your trading system. And that's why I use the FASP levels and say that, as and when it crosses UT4 level or UT5 level, exit the positions. If you are a writer, exit these positions. Why? Because volatility spikes is going to hurt your writing positions. For a writer, you don't want volatility. For a buyer, you need volatility. So it all depends on the volatility factor, and basis you being a writer or a buyer, determine and add some volatility factor into your trade setup. That is one other key factor that can be missed easily by a lot of people. Okay, and always prepare for the worst case and hedge your positions. If you have capital, always you should do some basic hedging at least, right? So let's go on. Then sometimes people ask, right, anywhere I put it and then it is getting triggered. Now, simple thing, market is trading at 41k. Where is the stop loss I should place? Now, just because you entered at 41k, you keep 40,950, you're playing a probability game, right? 50 points means 100% it will hit. Your stop loss is going to be hit. Now, where is the trend that's going to reverse? I would say that bears are in control when the market is at below 40,800, right? So if I have to keep a 200 points of stop loss, translate that into a premium, that's close to 100 points stop loss, correct? And if I have to do 100 points of stop loss, then I will not be taking all the position at one place. So first I will be entering at this level at 41k. Then at 900 I will enter the second lot. At 825 or 820 I will enter the third lot. Maybe 775 I will place a stop loss. Now that is the volatility based stop loss and volatility based entries, right? So these are the things that's going to define how you are going to manage your capital and protect it. I know this is all too much of things, but trust me, start off with your Excel sheet. Put your capital, what is your risk reward ratio, how much is enough for you, what is your acceptable order quantity per trade, and then where you are going to establish everything, where you are going to average, and at which levels should I take so that I can be directionless and then feel comfortable even if it moves 100 points against me. Will I be able to take it? That should be the sizing. Identify the comfort, emotionally neutral size. All of that you need to do and work on it. uh, Trust me, this is not some 1 hour activity. If you have to build a system basis this, it will easily take 6 months to 1 year. I'm not joking. Okay, you will need about a year to come up with a system that's going to help you with including all these things for your advantage, like volatility, capital management, risk reward, finding strategies that is too less risk and too big reward, and stop loss, managing stop loss, when to average, establishing a trade system by itself, and then depending upon what sort of capital that you are going to deploy and what is your total capital. Everything requires a lot of work. So do that, and hopefully you will find the right kind of setup for your trades. That brings us to the end of the session. Any questions? Feel free, guys. Right. Quickly, if you guys have any questions, please do let me know. Yeah, I hope you all enjoyed the session, and very sorry, my mom is leaving to hometown, so I have to arrange and then have to send her off now. That's why I have to rush. Um, Maybe we will connect again in the live stream. If you have any questions, please do note it, and tomorrow we will discuss it in the session. Right? Yeah, you're most welcome, Calm Mind. I hope it was useful. Sure, I think so that think about it and then post it in the group as well. I will take those questions tomorrow in the live stream. Yeah, sure. Yeah. Thanks, Paresh Patel and Kempagoda, Calm Mind, everyone. Please do note your questions and then keep it. Let's do this in detail tomorrow. Anyway, the session will be available and you can watch it over and again. And if you have more questions, please feel free to ask. So that's it from my end, and I'm going to sign off. So take care, guys. Talk to you all tomorrow. Bye.